All right, now we're live. Welcome back,
Oh.
everybody. You got a
boys.
young man here who's mastered.
I am stronger than strongman. I bench press 300 pounds and I'm 19 years old. I have video evidence for that shit, boy. And I military press 220 pounds at 19 years old. And you have this virgin here who drinks an energy drink.
Well, I have this purple one in honor of you.
Okay, now let's get serious. Now listen, strongman. The reason why I'm here today is because you are a fucking grifter and you are such a trash investor. And I think someone like you deserves to be put in his place by no other than myself. So
I'm ready.
You're ready? Now, of course, for you, can you take down a notepad, please, before we start?
Sure. Yeah, I've got it right here.
Yeah, you need to write something down.
I'm ready.
Okay,
I'm writing down right now.
Okay, 988. Have you written that down?
I did. Yeah, just now.
That's a national helpline for mental health, because after you get destroyed by a 19-year-old, you're gonna need mental health help. My brother.
Wait, is that like a Denmark or whatever mental health number?
No, it's 988. It's a suicide helpline. All right.
It's okay. We got to say self-deletion on YouTube.
Yeah, sorry. My apologies. Yeah. I'm sorry.
You got if you want to be a YouTuber, you got to learn the lingo. Okay.
Yeah. All right, brother. Let's go. Let's watch that video, because that's what I want the people to see how stupid you are for going international, because that's the worst thing you can do. It's like, dude, I cannot comprehend how you are breathing and alive when you choose VT. Like, that's out of my mind. Anyway,
I'm kind of crazy. All right, you want to watch the video? Are we ready for this?
Yes. Put it up. Okay. Now, this is John Cena. This is the relentless strength of the market in America. All right, brother. This was only John Cena. So now you're about to face Brock Lesnar. So you better get on the ground and pray right now, because it's going to get even harder. All right. I need to upload another video. I can do it.
Gee, we got another video.
Right now, it's Brock Lesnar, brother. So you better... Are you going to cry now? I hope not.
I mean, I can see why I should buy TQQQ now.
Okay, wait. Okay, actually, you can see in my username, it's not only TQQQ, right? As you can see. Okay, brother. Is the audio is on YouTube, right?
Yes.
Yes, it is.
Unfortunately, okay. Yes, it is.
Shut the fuck up, brother, because I am 19 years old, and if you would have followed... Dude, in 10 years, my CAGR, compounded annual growth rate, will be like fucking 20% at least. And you're gonna be with trash VT sub 10%. So you better show some respect to your
right.
to the smarter people here.
I mean, that's guaranteed. All right, let's do this.
Well, it is a system behind it, right? Okay. So now that you faced Brock Lesnar, you should.
Oh no! Is there more?
Up. Put it. Yeah, there is one more.
There's more we have to endure.
Put it back up. Put it back up. There is an important.
Which one? There's two screens. This one.
The Federal Reserve can and will rescue our economy. Why will they not? Like, if we went into a recession, it would have been a depression. And then, basically, if they don't do it, they will just basically let America fucking fall down, because, a recession can destroy a nation, right? If it becomes a depression. So they will do it always. Now, of course,
we never recovered from the Great Depression.
That doesn't make any sense whatsoever.
Well, you just said recessions and depressions destroy nations. Why is America here?
Look what happened. I mean, of course, it depends. I'm talking more about Germany and so forth. Okay, so this is another point. So now you faced John Cena, the relentless strength. You faced Brock Lesnar, the Federal Reserve, and now the last, but maybe the most important one, Big Show. Play the video. Son. No. Yes. Yes.
Sorry.
Wait, let the video stay. So it's the same for S&P 500, right? It's more stable. It's something you do for retirement, like S&P. QQQ is more for growth. But I think the outperformance of QQQ is structural. But that's why I'm here with Weakman personal underperformance to talk about this. Like, he can bring any value into this, right?
Look, I've already put in my sell order for VT. Okay, I've never been more convinced than seeing Brock Lesnar.
You better show some respect to them. Big Show is one of the biggest ones here, right? Because the enhanced compounding is like, I mean, you can see it behind me, brother. I need to get out of the.
I mean, Big Show's a big guy. So I should buy TQQQ.
Bro, shut the fuck up.
I mean, like, I see the connection here. You know,
bro, it's like, you know, I have to make this a bit entertaining. That's what I'm doing now. Okay, that's all I'm doing. Okay, now look, it's not done yet. It's like 30 more seconds. Okay, brother.
You already have. I don't know if I can be destroyed anymore.
Okay, now look, I like to laugh and all, but I want basically look. I paid you $120, and I'm basically helping you now. So you know, normally in life you have to pay someone for help, like you pay a lawyer to do your case, right? But right now the lawyer is paying you to just sit around and watch, right? So look, let's have a very constructive decision. You know, let's be constructive. Let's have a conversation, and let's just show how fucking stupid you are, because that's why I'm here, right? Okay, so let's talk about. Look, I sorry for swearing so much. I mean, I just want to create a bit of beef and hype. But John Cena.
You said you're sweating?
No. Sorry for swearing so much.
Oh, swear. Okay. Yeah. I mean, you do seem kind of nervous. I was wondering if you were sweating too.
Yeah. Okay, bro. I'm nervous, brother. This is not even matching. Look, John Cena, the relentless upward strength of the American market, and it is the American market for a very important reason: 401k and Roth IRA, right? You know, these systems only exist in America. You know, I live in Europe, and I wouldn't want to invest 1 cent here because it's such a trash system. You know what they do here? People buy a house and they work for 40 years. That's retirement. And then the government pays you like 2K a month when you go into retirement and you have your house. That's it. That's literally it. And okay, you have some options for 401ks, and kind of in Belgium, it's called pensioensparen, where you basically give a bank your money and the grifters charge you 1% of it on it, and they underperform the normal S&P. So, you know, it's a pretty scammy system all around. This is the same, like, look at, dude, you agree on the fact that the stock market is not the economy, right? Do you agree?
I mean, I'd say there's some correlation, but obviously, you know, the stock market isn't always going to go in lockstep with the economy. It's all about corporate profits and their expectations of future corporate profit growth. That's like, what defines the stock market.
Look, can I share my screen?
Sure. Which one? There's like 5 open now.
Oh, can I just share my whole screen? Like, you see this, right? Yeah?
Yes, I do.
Okay, good. So China indexes. What is the most popular in China index? So, of course, we all know how much of an evolution China has had in the past 20, 30 years, right? Yeah, look at this. I mean, I don't know. I have to... MSCI China, right? Let's hope porn doesn't show up in my search bar, because it can. Okay, let's just look. You know, China has had extreme developments in the last 20 years, right?
Yeah.
Well, what's wrong with the stock market? Like, China is a lot wealthier than like in 2012. Like, that's like a fact, right?
Yeah.
Yeah, it's like an absolute fact. So why the fuck is their stock market flat? Even though, like, let's be for real for 1 second. If you look at the amount of gainage, right, that China has had over the past 12 years compared to the USA, I mean, would you say China has grown more than the USA? Or
well, I mean, I didn't dispute that economic growth is the same as stock market returns. Right. I'm not disputing that. I mean, you can have an economy that grows massively. I mean, some of the fastest growing economies are like, you know, developing nations like Nigeria.
Yeah.
So yeah, I mean, Nigeria's stock market isn't necessarily going to do amazing just because their GDP is growing faster. I'm not disputing that.
Yeah, that's the point, right? I know you're not disputing that. So this is basically now I can share. So yeah, let's go back to John Cena. The relentless strength of the market in USA. Like, John Cena is only in the USA, as you know. You know, he's also in China sometimes, but what I'm trying to say.
Hold on. What was that? Was there a chart there that you had that like showed international and the United States alternating?
Yeah. There you go.
So, I mean, if past performance is indicative of future performance, then wouldn't you want to buy international right now?
That's the most stupid thing I've heard, and I think we'll hear a lot of that from Strongman.
Okay, but you're pulling up a 10 or 15-year chart of QQQ, and you're saying, see, look, it went up a lot. Which you're implying that because the past performance was good, therefore the future performance, because you're buying right now, you didn't buy 10 years ago, you're buying right now, bucko. You're saying past performance, future performance is going to be the same thing. Therefore, if past performance is indicative of future performance, you should be all in international right now.
Oh my God, Strongman. Dude, I know you don't want to lose a debate.
Pull up this chart.
No, let me talk. Strongman, I know you don't want to lose a debate to a 19-year-old because then people won't pay you $50 anymore to talk about some stupid stocks, right? Listen, look at this chart. You can see very well that the USA has had more periods of outperformance compared to international, right? This is a given.
Well, I see alternating.
Yeah, but you see when it's in USA, it's longer. And actually, we're on the longest streak, right? Now, let me talk because I'm so much smarter than you. You don't actually bring any value to this.
I'm learning, yeah.
Okay, good. You better fucking learn because this can save your future, right? If you listen to me. So basically, what we can see here is that international has had some blips, right? Okay. Does this date remind you of anything? 1987. Does that remind you of anything? The big crash, the Black Monday, right?
Sure.
Yes. So Black Monday was a reason, right? Okay, I'm not saying it's the whole reason, but we can say Black Monday was a reason for the outperformance of international in this period. Do you agree?
I have no idea. You're saying one day is the reason of
not one day. Of course, after Black Monday, it didn't just fucking go up straight in a line after COVID, right? It kept stagnating and going down, and it had a massive loss.
Sure. So the only reason that international did better was Black Monday. You're right. 100%.
No, it is not the only reason. Look, I know you don't want to lose this debate, but you have to respect me, right?
I've already lost. You've destroyed me.
I know you already lost. So you have to let me talk and understand why you lost so that you can maybe improve yourself in the future, right? Because that's something important.
I'm trying to understand.
Okay, so here we have 1987. We all know Black Monday, the period. Basically, as you look at this chart, it goes back to 1975. Basically, what I'm trying to say, if Black Monday had not happened, then basically, and after that, the stagnation of the market, USA would have actually outperformed here as well. And here we go to 2007. Now, this is a classic, as you know, the global financial crisis. If the global financial crisis had not happened, this thing would be here. So then you would have an outperformance of the last literally fucking 40
if the rest of the world had been nuked, USA would have always outperformed.
Dude, that's just such a stupid thing to say. If the world got nuked, everyone would be dead, and the stock market. Dude, do you think the USA is just like a closed-off island from the whole world? Like, are you that stupid?
Well, I mean, that's what people think. It's just like this magic land where stocks vertical line into infinity. Yeah?
Dude, didn't I just tell you like 5 minutes ago? I'm talking about the 401ks and the Roth IRA, and actually, I was just gonna pull more. Look, this is what I was gonna pull, and you can do this for mutual funds.
So what if Germany opens? What if Germany starts IRAs? Are German stocks gonna start vertical lining forever into infinity like American stocks are?
That is possible, but it's gonna take a while because the German population is not accustomed to investing in the stock market.
How do you know what Germany is
Listen
gonna
to me. You cannot know, right? But even if they did implement such a system, how much can you contribute to your 401k a year? Can you tell me?
I don't know. I forgot.
Okay, it's going to be more than 10 or 20k, right?
Yeah.
Okay. And then your Roth IRA, I researched it's about 7 or 8k.
Yeah, I mean, that's how much you can put in. Yeah.
But you can put more than that as well. But the tax the tax incentive is to put in like 7 or 8k in a Roth IRA and to max out your 401k, and it depends on your income, right? Is that correct?
Sure.
Yes. Okay. Now it is correct. In Belgium, do you know how much you can put into your retirement where they invest in stocks and even in those even in those funds, those scammy ass grifty funds where you get like 6% CAGR on the best year ever. Like those funds underperform S&P for like since the beginning of time. This is how scammy they are, right? So the maximum amount you can contribute
How much?
1,000 a year.
So, so Belgium raised the amount to 20,000 per year, or no, 50,000. You're saying Belgian stocks will start vertical lining?
Oh my God, dude. Please turn on your brain for a second. I just said
I'm trying. You're just so brilliant. I'm trying to understand.
Look, listen to me for 1 second instead of
I've been listening. I watched 3 of your videos.
Look. In Belgium, you can only contribute 1 fucking K to the same kind of vehicle as a Roth IRA or a 401k, and there's only one of them. Basically, what does this mean? That, and they invest in the stocks in Belgium because they're, they need to by law, because that's how grifty they are. Look, why am I saying this? What's the point? Inflows into a market is the only thing that fucking matters, right? Why the fuck does Tesla have a PE of 50 and it stays there for like four years? Like, does that make any sense? It's literally worth fucking 10 times more than normal.
Because the market's expectation, they're pricing in massive future profits in Tesla because of FSD, and there's all these big things that Elon has promised. And, honestly, there's a potential that all those things could happen, which is why Tesla is such a high valuation.
Do you look at international stocks sometimes?
Do I look at them? No, I don't really look at my portfolio, to be honest.
No, of course I also don't.
Huh?
I also don't. I just buy once a month. Like, it's very bad for you to look at your portfolio because it's like, you are a human, and the last thing you should do is actively invest. You should passively invest. Of course, I'm going to talk about that as well. So basically what I'm trying to say is, did you notice, Mr. Wickman, how every fucking international stock has a lower valuation than exactly the same company in America? With the same earnings, same everything, right?
Of course.
Now, look, I'm not going to act like a stupid ass. That is called PE expansion. Basically, it costs more for no reason, right? And that's a fact. And I'm not disagreeing with that. So, okay, we have a situation where US stocks cost more for a reason, for basically no reason. But what if there is actually a reason behind that?
And there is a reason. It's the market's consensus.
No. I mean,
no,
the market is also efficient in fucking Europe and Asia and fucking Africa, whatever market they have there. I don't know, maybe like it's worth $1 million at most in the whole of Africa. I don't know how much that is. But in America, everything, it's like the efficient market hypothesis, but just slap 50% higher valuation on top of it, right? That's what America is. And that means you make more money, right?
What does that sound like to you?
A bubble. Right, but that's the thing.
I mean, I'm not saying the U.S. stock market's in a bubble personally. That's not how I am.
Neither. And I also don't think that. That's why I go 100% stocks. In you see on my screen here, you have TQQQ, which is Nasdaq 100 times 3. You have UPRO, which is S&P times 3, 500. QLD.
Are you showing the one behind you?
No, this one is just Nasdaq 100, right? So you see here.
No, hold on. Let me blow you up. Hold on.
Yeah.
There we go. All right.
Okay, how the fuck do I get out of this? Yeah, you don't. Okay, so you see you see the lowest line. You see this one? This is 1 times QQQ. Yeah, just the normal QQQ, right? This is QLD, which is 2 times daily, and this is 3 times daily. Now, I was arguing with some retard on your Discord, and he said that that the fact sheet of the TQQQ like literally counteracts me, because it says you shouldn't hold it for the long term because it's the daily rebalance, right? Well, this is what you get in a rising market, daily rebalance, right? The first line here is plus like 700%, 800, something like that. Second line is plus 4,500%. And the third line is plus 15,000%. Now, I'm not the best at math, but if you go from 1 to 2, it should be times 2, right? And if you go from 1 to 3, it should be times 3. No, because it's compounded. Every gain is compounded, right?
And every loss is also
if the market goes down. If the market goes down, and it can go down in the short term. Do you see this large drawdown in TQQQ? That was an 80% drawdown right there. Do you see how
I've noticed it? How much did QQQ go down? What, 30%?
80%.
No, how much did QQQ? The 1X?
30%.
So, okay, so what if in the future QQQ, for whatever reason, I mean, anything could happen. What if it goes down 40%? What's going to happen to TQQQ?
it's gonna go down 85%. I mean, it's gonna be between 80 and 85, right?
And do you think you're gonna be able to hold on to that?
I mean, dude, I have to. It's not a question of
You
will
have
I.
to.
I have to, because it's
Okay.
based on my system. It's based on my system. And actually, I have done some engineering in my own psychology. Dude, I get happy when the market crashes. Like, I get so happy. Dude, the best thing that could happen to me right now is like a fucking wipeout of the whole market. Then I can buy at the lowest.
Have you ever experienced that before?
Of course not. And that's the thing, Strongman. I know what you're saying now. Because you think, oh, you're just going to be holding and buying, right? And then you think, oh, no, I'm going to be panic selling, right? That's what you think, right?
Personally, yes, I do.
Yes. Well, that's also something I thought about, thankfully, because that's something to think about. It's something that can happen. It's a risk you're taking. And guess what? I am. Look, it's very simple. The market always went up on the long term, right? Even if it went down sometimes.
It did in the past, yeah.
Yeah. And there is a system behind that. Do you know what inflation is?
No.
You do, right?
Can you explain it?
Yeah. Okay. Inflation is the prices of everything rise. And because of that, the profits of every company rise. And because of that, their stock prices rise. And in America, everything is just more valued because of the inflows. Because you need to think about it. What do these inflows... Can I share my screen again?
Yes.
What do this... Dude, do you think anywhere on the planet you have like... Look, this is like 1.5 trillion right here. It's only 3, right? And also VTI, the VTSIX is like 1.7 trillion. Now, I don't even comprehend how much money that is, but that's a lot of money, right?
So why not just buy, the unlevered one? Why don't, if you like US stocks, why not just buy QQQ, man?
Because you leave gains on the table. That's why.
I mean, so why not? If there was a 10x leveraged QQQ, would you buy that?
No, that doesn't make sense because 10x leverage is over leveraged. You don't over leverage, right? There is a difference between...
What's the sweet spot of leverage?
Well, basically, how I view it in my eyes is 2x is for retirement. I know that might seem crazy for you.
I'm sorry.
I know.
I'm sorry. Go ahead.
Yeah, I know. I know how stupid you are. I know you like to laugh.
I don't understand.
Yeah. Okay, but I know you don't understand because you're a grifter looking at financial statements. But I'm gonna explain to you everything. So basically, in your wealth accumulation phase, now look, this is based on the fact that I do not believe events like .com and 2008 will happen again. Now, that might seem quite stupid, right? Okay, yeah, of course impossible, because you can go thousands of years and anything like World War III can happen and then everything goes to zero, of course. But yeah, that's a risk everybody has, no matter where you are. It doesn't matter whether you are invested or not, right? Because if your house blows up and you get nuked, well, then that's it, right? So basically, you have to invest in the stock market because the only risk to the stock market is World War III in my eyes, right? Because, look, the Federal Reserve, as I've shown with Brock Lesnar, they will just print fucking money in the face of any problem. And guess what? If they print money, things just start going up. Dude, don't you think this was a bit bizarre, what happened to the S&P right here, dude? Like, do you see this?
Oh, hold on. Let me pull it up again.
I'm sharing my screen. Don't you think this was a bit bizarre here, what we got here? Why did this happen? Why did this happen?
You're teaching me, man. I don't know.
Yeah, I mean, it's very simple, actually. They flooded the market with liquidity, and they basically, put interest rates to zero, and then there's no reason to sell anymore. Of at least, it puts upward pressure. Okay, if this thing wants to go up. Yeah, so basically, this is the Federal Reserve balance sheet, right? Basically, what I'm trying to say, COVID was a one-off event. Nobody could have predicted COVID, right? But then it happened, and then people lost their jobs because of pandemic. Now, of course, it's
so market declines really aren't predictable. You can't predict them.
Yes, of course.
And you can't predict the extent of them, right?
Yeah, impossible. Actually, it's impossible to buy at the bottom here. That's why you need to DCA, and also you need to stay. You always need to stay invested, right? Because even if it falls down, you see on the long term it just keeps going up, basically. Now, yeah, of course, as you say, predicting the market is like stupid and absolutely not doable. But you know what you can do? You can look at the systems behind the market. And the Federal Reserve is a big part of that. Now, listen, they are never going to say, we're going to rescue the market. You know why? Because then everyone will fucking go all in on TQQQ like me. And then you'll get the bubble that's like the mother of all bubbles, right? So they cannot. And also, look, I am very risk. I embrace risk because, look, you might have had a 80% drawdown here, but you got a 310% upside. Why? Because it is, look, as I've shown with Big Show, right? How the fuck? Look, there was this retard on Discord saying that the fact sheet goes against me of my own fund, which doesn't make any sense because okay, look, the fund is just wrong. Okay, I guess that's what I can say. The fact sheet is wrong.
You're saying the fact sheet of the fund is wrong.
Yes, exactly.
Okay.
TQQQ. Look, here on TQQQ you got 310%, and here on QQQ you got 146. And actually, you know, I do DCA, right? So I buy no matter what, and I do. TQQQ could crash 90%. I will be buying all the way, right? If you buy here, if you go from here to here, that's like a recovery. You 5x your money basically. But if you were in QQQ,
the exact bottom, true.
Yes, but I will buy at the exact bottom because I always buy, right? It might not be all of it.
I mean, yeah, one of your share lots, yeah.
Yeah, it's gonna be like, I think December, January, February. That was the bottom.
That's yeah, like but you know, so like that last drop was a mild. I mean, like relatively mild. Like, I mean, QQQ is generally more volatile than the total market, right? And that was a relatively mild almost recession that we had, and QQQ still dropped 30-something%.
It was anything but a recession. It's
I said almost recession, but
no, it wasn't even close.
But here's the point. So it dropped. So QQQ dropped what, 30-something%? TQQQ dropped 80-something%. What if QQQ drops 50%? You're gonna lose.
Go down to 90%.
You're gonna get annihilated.
Yeah, and then you go back up, right? Because it's not over leveraged. Look, if that were to happen with like a 5x or a 4x or like anything above 3x, you just get annihilated, right?
Yeah, but losses hurt more than gains. So that's true. If you lose 50%, you got to double to come back.
Look, brother, it's actually very simple. Look, I'm not talking about 5 years. You know, I realize I plan to be buying TQQQ for like 15 years at the least, right? You realize that, right?
I hope you don't, but
yeah. Look. Do you see this?
I do.
Yeah. What does this mean? Let's say that TQQQ, like tomorrow, let's say QQQ just stays flat, right? Which is impossible because it follows this, right? Let's say it stays flat, so it's 800%, right? This one here is like 15,000%. So let's say okay, it's about the same period. Look, if you want the same period, it's like let's call it 1,000%, right? Which is still 15 times.
Look how long QQQ was flat. Let me go back to the tech bubble. Look how long it sold off and it stayed flat.
Yes, for 70. Actually, it hasn't even recovered from the top of the dot-com bubble. Right?
So what if that happens again? What do you think is going to happen to TQQQ?
That's the whole point. It will not happen again, and I will go into depth onto that as well. Okay. Right? It's going to be a lot of ChatGPT. I guess
ChatGPT.
Yeah, I know.
Well, I got to piss. You can keep talking. I'll be right back.
Okay, but I'm okay. I'll keep talking a bit to the audience. So basically, boys and girls that will be a lot richer if you listen to me and not to Strongman. So you have here, it's like 1,000%, okay, this goes from here. So it's like from here, this is the same period as this, right? If TQQQ were to literally lose, if it were to go down 90% tomorrow, it will still have outperformed QQQQ, right? Even if it will still stay above, right? So you haven't lost any. Okay, you lost 90%, but if you had invested in QQQ, you would have been even lower, right? Because actually, this is if QQQ stays flat, right? Which if TQQQ drops 90%, this thing is not flat. This thing is crashed all the way, right? Basically, what I'm trying to say is on a long-term basis. Okay, yeah, sorry. I'm actually a portfolio visualizer. I'm sorry for that. Yeah. So basically, on a long-term basis, this is what you get, right? And also, this is for QQQ. Now, S&P 500 has more inflows, but the correlation between S&P and NASDAQ is so close. Okay, I'm just trying to show what I mean.
You're going to keep DCAing if it goes down 99%?
Yes, exactly.
You know, if you did, I would be impressed. But
I fucking will.
Okay, so if you have $100 and it drops to $1, how much do you have to go back up again to break even?
Brother, do you realize basically how it goes is that it's based on the market. I mean, you could call QQQ the market. It's because it's so highly correlated to S&P 500, and actually that's what I want to talk about. The overperformance.
The QQQ is the market.
S&P is the market, right? But QQQ is so correlated, it's basically the same thing. Now listen here. Do you see this? Do you see this here?
You want me to listen or see?
No. Do you see my screen? Do you see my screen?
Can you? Is there a way you can zoom in a little bit?
Okay. Yeah, I can do this. Yeah. Do you see this?
Yes, that's better.
Okay, so basically we have here the lowest line QQQ, then you have QLD, and you have TQQQ. Do you see how, this is the same for S&P 500. Do you see how it literally always stays above, no matter how much it crashes? What does that mean? Basically, if you buy TQQQ today, let's say you put 100K in it today and you wait 15 years. Let's say in 15 years, you get a 80% drawdown, which, you know, if that happens, just don't go into retirement and just keep holding and buying, right? As you do with the market as well, right? Basically, the effect you get is because of the compounding over the long term. Dude, don't you think this is a bit interesting that TQQQ, which is like 3 times the daily movement, is up 15,000% and QQQ over the same period is up 1,000%? That's an outperformance of
because the start, like, you know, we had the Great Recession, 08, 09, whatever. And then ever since then, we've had like an insane bull market. So if you plot TQQQ from the start of that bull market, like you pick that date, you know, theoretically, sure, you could have made a lot of money. But you could also pull up the same chart and pick another time. You know, I don't think it existed.
This is not, look, strongman.
Okay, can you 1978? So, but we had a crash in during the tech bubble after 1978.
Strongman.
And TQQ would have been down 99%.
Yes, it would have been wiped out actually, right?
Wiped out. So what would have happened to your portfolio?
You would have been wiped out. Yes, exactly.
Why take that risk? Why not just buy QQQ? If you like tech, just buy QQQ.
Look, my philosophy is based on the fact that the .com won't happen again. Or if it does, it will be a lot less bad. And also, what's so bad about .com? What's so bad about .com? Because, you know, TQQQ went from like 1 million to fucking 50 million. If like there's a long chart. Look, I can show it. Yeah, this is the one I want to show you. Okay, look. Yeah, this is what I want to show you. Okay, do you see this?
I do.
Okay, so you have here 1995. Basically, look, it was a pretty bad crash. Don't get me wrong. I'm not trying to fucking say it wasn't, right? But
negative 99.9%, huh?
Yes, exactly. But this is if look, do you know there were regulations that happened after the .com crash? That basically it's the Dodd-Frank Act, something like that. It's basically no, it was in 2010.
So they passed an act, so it can't happen again. Is that what you're saying?
I'm not saying cannot happen again. Everything can fucking happen.
Well, but you just said that will never happen again.
Well, you know, basically, I don't think it will happen in the next 15 years. Yeah, this was the one I'm talking about. So basically, you have increased corporate accountabilities because what they did is a bunch of fraud. That's why the stock went up so much. Everyone was like, oh, everyone is going to become a billionaire from .com, right? And also, we have an increased sophistication of investors.
I'm trying to read, man. I'm trying.
Yeah. Basically, the thing is, if we just go through this and just talk about this, it's gonna be boring for the audience because it's just reading text, right? So we have to go more into depth ourselves, right? So we also have a sophistication of investor base. Dude, look at Nvidia, right? This thing is basically stabilizing. Now, of course, this is only like fucking 4 months, so you cannot really know what's gonna happen.
Is there a triple leverage Nvidia I could buy?
Oh, fuck that, dude. You're never... Dude, buying Nvidia would be stupid enough. Leveraging that shit would be financial suicide, so never do that.
Why?
Because it's stupid. Why? It's very simple. Because you have fucking, say, 60% drawdowns and you just get wiped out, right? This doesn't happen in QQQ. I mean, of course, you can get like drawdowns. And also, you're so stupid. Look, okay, we had a crash here. We had a crash here. But look, it just keeps going up, right? So let's say you
QQQ did, yeah.
And S&P, right?
Yeah, but neither of those are triple leveraged.
Oh my God, you're so stupid. do you know? Listen to me. If QQQ goes up, 2x the QLD will go up even more. TQQQ will go up even more, and then it gets kind of capped off, right? Now, of course, I can understand from your standpoint the 99% drawdown, right? Basically total loss here. But this was based on the dot-com bubble. And actually, if you look a bit deeper, you see 1995 to around this date, it basically kind of stayed flat for quite a period. And also, look, if you had DCA'd yourself out, like you don't have to do it at the top because that's impossible. Let's say you just like here, you were like, yeah, this doesn't look good, so I'm going to DCA out. And then it keeps going up because you cannot time the market. And then you enter back in, you DCA over like 1 or 2 years. Well, your cost basis would have been around here. You still have your flat decade, but of course, this is based on the dot-com bubble. Look, backtesting this shit is so stupid because there have been regulations. Did you know? Like, let's go back to Brock Lesnar for 1 second.
Okay.
Look. Okay, look, this is just for entertainment, right? And it's pretty entertaining, but there's also like a knowledge behind it and fact. So quantitative easing was first used in 2008. Now, this was not a long time ago, right?
Maybe for you it was.
Yeah, for me it was.
How old were you back then, by the way?
I was 4 years old, my friend.
Oh, okay. Okay.
Yeah. What were you doing? Yeah. Dude, I'm still smarter than you. Age doesn't say anything when you have like some stupid ass,
age is just a number.
I mean, dude, I'm actually pretty impressed at myself how smart I am to come up with this. Also, you know, overconfidence is a sign of being a dumbass. I know that, but indication, it's true. And I'm not. Look. Only time will tell, right? Only time will tell. But I have to be overconfident because my hypothesis is very fucking strong. Okay, so after the dot-com bubble, you had different kinds of regulations. And also, just think about it. Do you think dot-com bursting was like a good period for the general market? It really wasn't, right? Like,
well, I know you didn't lose 99.9%. Look,
this for the normal people, you know, S&P 500 is like normal retirement. QQQ is, look, that's the question. The outperformance, is it structural? And I think it can be, right? So you had your 35% drawdown here. You had a 50% drawdown. Also, QQQ is actually safer, I would say. Now, of course, it was quite a weird period in 2022 with the tech crackdown, because here it was like 30%, and for S&P it was 15%. So yeah, that's a lot better, right?
And TQQ was what, 80%? You said?
Yes, but it's based on this, and this always recovers. So TQQQ also always recovers. Of course, I know what you mean by the fact. Okay, why is? Look, this one is up from the top back then to now. It's up 17%, and this one is no. I want to look at this one, and this one is actually still down like 16%. This is leverage decay, right? It's something you have to deal with. There's something. Look, I wish the market just went up in a straight line 10% every year, and I had to pay no money for my my leverage here. But you do, right? So basically, you have your SOFR, right? This is what you have. And also, this is something I'm going to destroy you in. Dude, taking 2x leverage on the market is the most no-brainer thing. It's like a 5-year-old could figure it out, how fucking simple and good it is. Okay, so this is QQQ. You have to pay for this. Leverage is not free, as we know. So you have your SOFR. This is the current one. It's going to go down because, as we know, 5.3% on a SOFR, that's not really the norm, right? But right now, you have to pay this. This is like your expense ratio, basically, because of the leverage. I know it's crazy, right? But
that's not that bad.
No, it's very bad, but you have it's something you have to deal with, dude. If TQQQ did have no cost, dude, it will be up like 30,000%. It will be up like 1,000,000,000% in the last couple of years.
I mean, yeah, I guess if you could borrow for free, I guess maybe it is rational to,
Yeah, but you can't, right? So, but this is like the only drawdown, and also bubbles. But look, the thing is, it's actually not good what I'm doing now, talking to other people about this. Now, I'm doing this to reinforce my view, basically. And I know destroying you will help me in that. I might not be the best debater on the planet, but I'm just trying to explain what I've seen and what I've analyzed, right?
I mean, the past performance speaks for itself,
No, it doesn't. That's performance chasing. You need to understand the system. You need to understand.
Yeah, but why did you settle on? It just seems like you're settling on the ETF that did the best. VT's trash. It's got too much international. VTI's trash. It's got too much small caps.
Listen to me.
The reason trash. It doesn't have the best tech stocks. QQQ has most tech. Oh, but what if I leverage QQQ? You see
that's not a mentality at all.
Degeneracy.
Look, it begins with the fact that QQQ and S&P 500 will go up forever on a long-term basis. Do you agree with that?
No.
You are so stupid, strongman. There are literally systems behind
I clearly, I'm learning a lot. I'll be honest.
Look, I'm going to give you some reasons why the market goes up forever. Inflation, nominal. Right? This is not real gain, but it still happens. And actually, this is why leverage is so smart, because then you take the nominal inflation and you multiply it times 2 or times 3. Never over leverage, never above this, right? So this is one reason, actually a very strong one, and it emphasizes how great of a strategy it is to take 2x or 3x leverage on like a S&P 500 or QQQ, right? Okay, then we have innovation. Now, we see this non-stop, like it just, now you have AI. Now, of course, we cannot know. Now you have self-driving. We cannot know if these innovations will turn into more profits. But, they're doing their best, right? And also R&D spend is very strong. And, the companies have so much capital flowing in. They are so profitable. And also, this is why you're so stupid for thinking dot-com bubble is a problem now. Dude, do you know what dot-com bubble even was? Do you know how stupid that... Dude, dot-com bubble is like so easy to spot. Like you could fucking get out at the top, if anything, if it happens, right? Which it won't happen because we have a more sophisticated investor base.
So right? you think he would have got out?
I mean, dude, it's so easy to see. Dude, you have companies going up 1,000%.
Why didn't like Wall Street see it and all the sophisticated?
Because humans are stupid and humans are made to lose money in the stock market.
That's right? True.
That's a fact. That's the most important fact, and that's why I believe the less you do, the more you make. And that's why I want to be a passive investor. Because think about it. TQQQ and UPRO and SSO, the 2x and 3x leverage of S&P and QQQ, they are the same fucking thing as
so
the
you think TQQQ is a passive investment?
I know it's not, but that's how I'm going to treat it. And that's how I see it, because that's what it fucking is. And the numbers speak for themselves.
I mean, 20,000x Bitcoin is passive, I guess, if I just DCA into it.
Dude, strongman. Look, you're acting like you're talking to a retard now, and I'm not.
No, I'm not. I'm trying to understand. Like you've shown that this thing, if there is a bull market's amazing, vertical lines, but you can also get absolutely annihilated in a bear market, and both things can happen. So why not just buy, if you like tech, just buy QQQ. You don't need to buy a leveraged ETF.
Shut the fuck up and listen to someone who's smarter than you.
I'm trying to understand.
You got annihilated. You got annihilated, right? So you went from 1.7 million on TQQQ. This is TQQQ, this is QLD, and this is normal QQQ. So you got annihilated, right? Because here you went from 1.7 million to 370K. That's a massive loss. But look at QQQ. It was not even close to the dude. This is not getting annihilated. This is just temporary downturn, because then look, 1 year later, oh, you're back at 1 million. Oh, and you bought here. You went from, dude, if you have put in 370K here, fucking 2 years later, you have 1.3 million. Do you see how stupid you are now?
I can see for this selective time frame, I guess if you had bought at that exact
this is how markets. Listen to me, dude. Let me talk.
But you could pull up the same thing if this thing had existed during the tech bubble. You could have pulled up the same thing and been like, "Oh, look, QQQ crushed TQQQ because it did 99.9%."
let me see. Yeah. Because that was an extreme scenario. Now you have to understand with leverage, right? If you get like a 80% crash in QQQ, as we have seen here, right? This is an actual 80% crash over a long period. A 2x or a 3x just gets wiped out, right? But the thing is, this is very easy to spot, and I'll show you why. And you can, like, let's say you are here and you spot it like this is retarded. Okay, DCA out, 25% here, 25%. Okay, this is the top. I know you cannot time this. Maybe you're going to be here or fucking here. But this is easy to see, right? And then you just stay out of the market for like 1 year. And then you say, okay, now the market has crashed a lot. That's a good thing, actually, because if you bought here, this is your... Dude, if you bought... Listen to me, buddy. Wait, I need to find it. Stop laughing. Stop laughing. You're just wrong, and I'm winning the debate hand over fist. I'm just not the best debater, but look, look. 22K at the lowest point in 2002 became 9.9 million. Compare that to QQQ, where 125K became 2.9 million. Even after all the trash, right? Even after the 2008 with it again. Now listen, my strategy aims to basically capitalize on the Federal Reserve and the fact they will not allow 2008 to happen again. Like, we have seen this, dude. This is like, you can see this with your own eyes. And in life, to get rich, you have to take some risk. Let's be for real. You have seen this. Dude, this shit only exists, QE only exists since 2008, right? It's a relatively new thing. And basically, in 2020, they confirmed they will fucking rescue the markets, right? There's no question. So basically, that means 2008 won't happen again in my eyes. Now, you can go deeper into this, and I've went very deep into this. But this is not a scenario where I think about it. And by the way, if this had not happened, it would be just like, dude, TQQQ, if this had not happened, TQQQ would be fucking 25 million or something. I don't know how much. Just a lot. Like, from 22K to 25 million, if this hadn't happened, which, as the future points out, and as we see,
if, yeah, you could create any scenario you want.
Dude, listen to me. There's no way to be sure, right? But you can only do your research and think about the world and analyze it and take your conclusion. And 2008 doesn't, because they'll just print money. They'll just be like, here, motherfucker, take your stimulus checks. Here, motherfucker, interest rates are 0. Like, and QE, fucking 4 trillion, right? As you saw with the video of Brock Lesnar. It's like an entertaining video. Also, this. Now, actually, with TQQQ, and it's the same for S&P, it's the same for the leveraged versions, right? This is actually the biggest problem, because if you get a bubble, if you get such a bursting, you pretty much lose everything. And it actually starts to go down below the QQQ because of how leveraged it is. It's like, dude, this was like a period of 3 years of going down non-stop, right? So yeah, if that happens to TQQQ, you are fucked. But that generally doesn't happen. Also, that's something I want to talk about. You said that 2022 was almost a recession. Now, as I see it, recessions won't fucking happen because the government just prints money and they don't happen. Because why wouldn't they? Why would they not do it, right? It's like so basic, right? So unemployment versus S&P 500.
So,
right?
so like that's economics. It's just print money and then recessions never happen. Basically.
Yes.
Okay.
So basically, okay, I'm trying to find here. Okay, basically what I'm trying to show you, unemployment versus S&P 500 2022, right? Can you? I think we have an unemployment chart on TradingView, right? Did you know? You know. In order to have a recession, you need to have unemployment. Do you agree? I think you do, right? I hope.
I mean, you're teaching me. I don't know. You think I spend time like looking into this, like correlations between unemployment rate and recession? Like, I don't have time for this. I only have time to grift.
No, of course. I mean, dude, you're actually such a grifter now. It's sad to see, but anyway. Okay, so we see here we have unemployment, right? It's basically just going down all the way, right?
Mm-hmm.
But did you know look, can you go all the way back in time? Yes. Oh, I love this so much. Thank you so much. 2000. You see this?
2008.
Yeah, this is unemployment, dumbass, right? So you see 2000, basically the Federal Reserve, what they want to do, this their dual mandate. It's, low unemployment and low unemployment and low inflation, or just stable inflation at around 2%. Basically, the Federal Reserve doesn't want this ever. Here again, the Federal Reserve doesn't want this ever, and here they definitely don't want this. And you see, they basically did their best to not have it, as you see. This is what QE does.
But it happened. They don't want it, but it happened.
And the reason why it happened, dude, QE is a new thing. Why do you think QE?
Yeah, but you said QE started in 2008, but then we had unemployment spike in 2020, so it still happened again. You said the Fed wasn't going to let it happen.
Just a moment of silence for how stupid you are. Yeah.
Oh, man.
Look, I don't even have to say anything. Like, this is... Okay, yeah, it happened, right? Yeah, like, look, 30% down. And fucking UPRO was down how much? It was down like 70%. Yeah, 66%. For like a couple of fucking weeks. And then TQQQ. Basically, my philosophy is based on... Basically, what my philosophy is, the Federal Reserve rescues the market so you can take leverage, basically. That's what it's... And look, it's not because my stupid ass with a 10K portfolio takes 3x leverage that I won't do it anymore because, I don't want... Look, the Federal Reserve will never say this, but they indirectly rescue markets. Look, they're not just going to go and buy S&P 500 index funds like in Japan, because they actually do that in Japan. They will never do that, because if they were to do that, dude, everybody will take 3x leverage. Everybody will be leveraged up to the tits. And then you will get the mother of all bubbles, because prices will just go up for no reason, right? Like in .com.
But then the Fed will just bail them out. The Fed will just do QE and it'll keep going up.
No, they won't, basically, because, look...
No, but you said the Fed will just save the market. So, I mean, look, we might as well all just do 3x leverage.
Do you know what the Federal Reserve wants to have, actually? They want stable economic growth. Like, stable.
Did you call them before this?
No. It's my philosophy. I have my analysis on this.
Okay.
The Federal Reserve wants to have stable growth, right? And in doing that, they will indirectly make sure that crashes don't happen, and also that booms don't happen like this. Because actually, if a .com were to happen, again, the Federal Reserve, like they did this as well. This is something you can see, right? Oh God, I need the USA interest rate. So they actually did this in right? Look, this was 2000. You see, it was a 6.5%, even higher than today. You see, of course, they were a bit slow on it, but I don't know why rates were. I mean, dude, rates were so high for the whole fucking time period because the .com bubble was building up in that period, right? So basically, the Federal Reserve does not want bubbles. Why? Because this is what happens after bubbles. Employment goes up because the bubble bursts and then everybody loses their fucking job in the said bubble. So they don't want bubbles. They don't want COVID-19s. And basically...
How are they going to stop COVID? How are they going to stop that? They're going to print money? Well, I guess they did. Yeah. Yes. Come on. Like,
are you stupid?
You're saying the things the Fed doesn't want, but things happen anyway. Things happen anyway. I mean,
yes, and then this
they can't get. They're not God. They can't control everything.
Of course, they can control everything, but they can control this, right, dude? If the government hadn't printed money, what do you think would have happened here?
I have no idea.
Yeah, it would have crashed a lot fucking more. Let me tell you, I don't think we would have recovered yet, right? Listen, this is based on the Fed put. You have to search up the Fed put. It's very important. This is what it's based on, and that's why it's actually safe to take leverage. And people like you are so stupid because they look at .com and 2008 and think, oh my God, look at the backtest. Oh my God, it's a 99% drawdown. Oh my God, never buy TQQQ in your life.
But I'm looking at the backtest, is what you're saying.
Okay, give me.
How many backtests have I done in this debate?
Look,
I feel like you're the one doing all the backtests.
Look. I'm just going to take this very simply with you. Give me like 5 reasons why you should not buy TQQQ, and I'll just destroy you on each one. Go.
Well, number one, it's impossible to really predict the future. So if there ever is a market decline, a significant market decline, you can get entirely annihilated.
Okay,
that's the only excuse I need.
Really? You think you're so clever?
Yeah, I mean, like, why do I have to, like, you know, investing is about achieving your long-term investment objectives, and you want to have as sure a bet as possible of achieving that investment objective. And a way to not ever retire is to
have the highest
potentially have a market crash that completely wipes you out.
Okay, so that's why you look into these crashes. You have to look into them.
And no, but like that's crashes that happened in the past. Who knows what's going to happen in the future? Maybe a QQQ vertical line forever. Do you know? But maybe it won't.
Look? This is what's going to happen in the future. It just goes, and you see, you have some dips, right? You have some dips.
Well, those look minor when you zoom out, but if you own TQQQ during those little dips.
Yeah, it will go down a lot more, but it will stay above this 1x line. Okay, like here it was a 50% crash. Dude, if you had compounding here with like, okay, this is S&P. Okay, TQQQ at the bottom of this would be like over here. Still above it, basically. Right?
Well, okay, you're saying, assuming you bought like at the beginning, you bought like one share of it at the beginning of the chart. Maybe, but you're dollar cost averaging. So, yes, you know, at the point where you have crashes, your entire portfolio is going to be annihilated. Maybe the one share lot that you buy at the exact bottom will do well, but the vast majority of your portfolio will have 99.9% losses.
This is if 2008 and 2000 happen again. But that's the whole point. I studied this, and they will not happen again.
Right? Impossible. Well, okay, so you're saying it's literally impossible. Vertical line forever.
Look,
we had a market correction 2 years ago, and now it's never happening again.
Look! Oh my God, you're so.
Look, that little. You see that the most recent dip? You know, that little 2022 to 2023, TQQ just for that minor little dip dropped 80%. And yeah, you're plotting from a start point in the past. You're not buying. You're not buying.
Look, I am 20 years old. I am 20 years old.
I thought you were 19.
I am. Yeah, I become 20 like 4 months, right? So, yeah.
I'm 50. I become 50 in 15 years.
Okay, brother. Look, what I'm trying to say is that even if it crashes that much, and also you have to realize, .com is the only big risk with my strategy, because think about it. If everyone takes high leverage like me, it will happen. It's a fact, and that's actually not in my benefit to talk to you and educate you about this, right? Right? Even though I know you won't do it because you're stupid, right?
I'm trying to. I can't seem to understand what's going on here. I'm sorry. I
need to be a better debater, but it's actually so understandable. Okay, look. Let's go back to ChatGPT because I love ChatGPT so fucking much. I just talk to this guy nonstop every day, and it's of course it can act as confirmation bias. Don't get me wrong, but that's why you have to be correct before you go into it. Okay, so we have to look at is it this one? Yeah, sorry for searching, but yeah, no, I'm a kid, right? So I just compare it to John fucking Cena, right? I don't know why I did this. I had this idea. I can compare it to that, and it actually makes a lot of sense. So the thing is, QE did not exist before 2008, and also before 2000. Do you know a CEO and a CFO can get held accountable? That was not the case before 2000. So basically, how I see it, because it happened, it actually has a lower chance of happening now. So the fact that .com happened, it actually means it won't happen again. The same for 2008. Because after those periods, regulations were put in place. Here you had QE. Here you had, and also every investor thinks back, like when they see like a frenzy like NVIDIA, they always think back at 2000, right? Because humans, we can look at charts, right? And they see like, let's be careful here. Let's be very careful. This is why I do not believe in bubbles anymore. And I mean, of course, except if everyone buys 3x like me, but that won't happen, thankfully. Because as you say, people cannot handle volatility. Like, this is the presentation I wanted to show you as well.
What is this?
So
all right.
Okay, this was me when I was a bit leaner as well. You see how much sexier I am than you, like firsthand. So here you have the international over-diversified virgin, scared of volatility, living long-term, 10% or more compounding annual growth on the table. He will cry if his portfolio drops 10%. He said this on video.
You're right.
And then you have me, Chad, absolute Chad. You can see it in the jawline.
Clearly.
Responsibly leveraging the strongest indexes on the planet. Long-term enhanced compounding.
I just wanted to note that you have a picture of me shirtless saved on your computer.
I do, yeah.
Yeah, okay.
I jerk off to it before this. Let me tell you.
Okay,
Yeah,
and is this the only picture you have of me, or do you have like a folder?
By the way, this is VT on your chest, how much you're getting milked out of your games. You're just getting
okay.
And then you have here, so you have structural strengths confirmed on my side. And on your side is just like being a virgin. That's all you have. Now, as we look into the next slide, okay, this was made by ChatGPT. So you have here nature investing, right? We all know humans are money-losing machines in the market. This is why every time someone on your Discord says that they have some strategy with Bitcoin or QQQ or what the fuck. I mean, my strategy with QQQ is basically be a boglehead with it. Just fucking buy it and never think about it. And I do that on TQQQ. And here you have passive investing. It's, okay, I don't know what I'm even talking about this. I'm just trying to say passive investing works. Active investing does not work. Humans are made to lose money in financial markets. Our nature, our destiny, what our brain wants. Passive investing is the only way. Responsibly leveraging the market is the only way to beat the market, actually. Right? So John Cena represents the market's relentless upward strength. This is not the case for international. And this is mostly only the case for S&P 500 and NASDAQ 100. Now think about it. The NASDAQ 100 is the best companies on this exchange. S&P 500 is the best companies on the S&P 500, right? Which is the whole everything, NASDAQ and NISE. Now the thing with NASDAQ is that actually the best companies, they list on NASDAQ because the best companies are tech companies. You know, it's not like a miracle that all the trillion-dollar companies are tech companies. It's because it is the best business. And on top of that, it is the only business that gets people excited. Like every time you hear about a hype stock like Palantir, like Tesla, it's like, you know, Tesla is a car company, but they're like, oh, we are AI and shit. And then it goes up 1 billion%, right? People only get excited about the kind of companies that would list themselves on NASDAQ. So actually the NASDAQ 100 outperformance, it can be very structural.
So that's the one I should leverage is, you know, a fund or an index that people get excited about.
Dude, no, because then you are doing hype investing. The NASDAQ 100 is based on the top 100. The S&P 500
you just implied that. You just implied that, you know, or you can list the car company on the NASDAQ and, oh, but it goes up 1 billion% because it's hyped. So you're leveraging the hyped ETF. You're leveraging the hyped index. What does that sound like to you? Ultra giga hype.
Look. I'm trying to come up with an explanation. This is not what NASDAQ 100 is based on. It is not based on hype stocks. It is simply based on the top 100 on the NASDAQ exchange. It just happens that hype stocks have, you know, higher returns because, you know, like look at Tesla. The thing went up. It's now at a P of 50 and it just stayed there for like 4 years. You still made the gains if you bought like, and you know, Tesla, the thing is Tesla was only introduced like after Oracle was removed from the index, as I remember. So, you know, you have that as well. But, you know, like look at Meta, look at all the fucking stocks, look at Apple and everything. I think the outperformance of NASDAQ 100 over S&P 500 comes down to the structure of how the most innovative companies and the tech companies list themselves on NASDAQ, right? And also, did you know NASDAQ has more listings than NYSE? So that's something to look into as well. Basically, what I'm trying to say is even if the companies of today just go down, which won't happen because because of inflation, everything goes up, including profits of companies. It's gonna keep having that growth. And also something important I found out actually. S&P 100 actually outperformed S&P 500, which suggests possibly that 500 is over diversified, right? Because here you see just S&P 100, it's like S&P 500, but the top 100. So that's also like an indication of outperformance could be structural. Now, if you want to be safe, you just take 50% TQQQ and 50% UPRO. Yeah, I know.
I'll consider that.
I know you're stupid, man. I know you're so stupid. Anyway,
I'm learning a lot, though.
Look, John Cena, the market relentless strength. John Cena represents the core strength of the market, the natural upwards trajectory driven by economic expansion, corporate profits, and innovation, and also inflation in nominal terms. No matter how much you try to outthink the market by picking stocks or timing trades, the S&P 500 and Nasdaq 100 keep moving upward. And with 3x leverage or 2x, this is it's getting close to over leverage. That I can see that as a critique point. This upward force becomes exponential. So basically, beating normal S&P 500 is already like impossible. Trying to beat 2x and 3x is like flat out mission impossible. Nobody can do that except like maybe a computer, and even then, like it's the algorithms that they use. And I don't have access to that, and I don't think neither do most people. So just as Cena dominates the ring with his unmatched strength, the market natural growth overpowers everything, right? As you see in the charts. And even in such a bad drawdown as we've had. Now, I want you to talk as well, right? It's just like, this is not the best, how can you say, the best debate I've ever done on the planet. But yeah, just look, even if you get massive crashes, on the long term, it really doesn't matter because look, you had your 99% fall here, from 38 million to 22K. But fucking how much is it? Okay, it's 20 years, so it's quite a long time. But basically, if this hadn't happened, and if this also hadn't happened, TQQQ will be like a 30 trillion. It will be a lot more than 9 million, right? So this is why it's so important. And also look at QLD, dude. QLD literally always stayed above the QQQ. So basically, this means taking 2x leverage is like a minimum. It's like minimum. That's why I do it in retirement, because you get an effect of enhanced compounding, and you can just withdraw 1% a year, and your wealth will grow forever. And
when you want to withdraw from your retirement portfolio, you think a good way to make sure you get that money is to just do 2x leverage.
Well, basically with 2x leverage, so we know the market goes up long term forever, right? That's a fact.
Yeah, but in retirement, you need money soon. You need money like every week, every month, whatever.
Yeah, and that's the thing. Like, let's say you entered into okay, wait, I have to go back in time a bit to this. So let's say you entered into retirement here, and let's say you put your I need to zoom out. So let's say in retirement, right? This is, okay, this is for QQQ, but that's the thing. This is only if QQQ has structural outperformance above S&P, which is still a question mark, but it could. And even then, let's say that's not the case. There is still like a margin of error, margin of safety you have, because it's standard for it to outperform. And it's based on the same system of survivorship bias. It's just now based on the index of NASDAQ, which has more companies listed. It's not as over-diversified. And the best companies rise forever, kind of. Also, do you know the Fama French papers?
I wrote them.
Yeah, it's basically, they said that the best companies are not the best investments. This was done, the paper was done in a time where basic telecoms and basic financial stocks and all stocks were basically getting overtaken by tech stocks. So yeah, of course, then if you would have bought those, it would have underperformed, right? But that's stupid to think that now, because that's also what I thought when I first looked at the S&P 500 like two years ago, I think. I saw Apple was at the top and Tesla was at the top, and I thought, I don't like this. I'm going to do active investing. But I was an idiot, because there is survivorship bias. So even if one of these companies go down, it just gets replaced by a stronger one. And because of inflationary pressures and increased innovation, the next big companies will be worth 10 trillion. And the next ones will be worth 20 trillion. And the next one's 30 trillion. This is the same reason why a house cost 20K 50 years ago, or how many years ago, and now it costs like 300K. It's the same for stocks. And you make money, and leveraging that means you just make more money, right? So that's the thing. And this is for index funds only, not for individual stocks, because individual stocks are so risky and stupid. Okay, Strongman. So I know you laughed like the stupid ass you are when I said 2x for retirement, but why do you think I would have said 2x for retirement? Because if you get an effect of a rising market, right? Let's say this was 300K put into each one of these, right? even if, let's say you go here, okay, if you go into retirement here, yeah, you're gonna have to deal with this for some time, right? But then it just keeps going up. So let's say you go into retirement here, you have your 300K, right? You know, the market keeps doing itself, compounding and compounding over the long term. As time goes on and on and on over tens of years, TQQQ or UPRO keeps going up further and further from the underlying. So the underlying.
Yeah, but this assumes you're not taking money. Like when you retire, you're taking money.
Yeah, you take money out. You take like 1% out a year because you have so much money. And also an important part of my psychology is I never spend money. Never. Like I literally don't do it. I don't even think about spending money until I'm a millionaire, right? Which puts me above other people because we all know spending money is like poverty basically in disguise, right? So basically, even during those crashes, going into look, the third line here is TQQQ, but I cannot say with a straight face that you can do this in retirement, right? It's hard for me to say that because the volatility, right? But you know, no, look, in retirement I'm gonna switch to 2x because the volatility is so high, and you know, when you go into retirement, you're gonna live for like another 50 years, you know, because I want to retire when I'm like 30, so I'll live time. You can never say that something like .com or 2008 won't happen again, right? But even if that happens,
I thought you said that.
Look, over long periods of time, everything can happen. But look,
so it could happen again.
It could happen, but there have been
earlier you said it couldn't happen.
Because there have been regulations and steps taken to make sure it doesn't happen again, right? And also getting out of
the bubble. But can it happen or not?
It can happen. Everything can happen,
okay.
Right? Your house could get nuked tomorrow, right? So everything can happen, but there are things that happened. Look, I want to show you this as well because, look, we talked about 2008. 2008 is figured out, basically, because the government did QE and now they just print money like a maniac whenever things go bad. So we're saved from that.
Look at that thumbnail. You see that one with the 2000 and 2024? Are you concerned about that?
This was 3 years ago, motherfucker. And also,
you watched it.
Oh my God. Okay, we're gonna go. I haven't watched it. Do you like this guy? Do you like this YouTuber or something?
Oh yeah, I basically whatever he does, I do.
Ah, okay, I didn't know that. Anyway, look, the thing is, strongman. Did you know the PE of TQQQ or QQQ? I mean, was like fucking 100 in the .com top. This is not the case today, dude. If this was like a bubble, like in 2000, Nvidia would be like $10 trillion at least, right? And it's only like 3 trillion. Okay, it's a lot, right? And it's already going down, dude. It's already going down. Like it was 3 trillion. It lost fucking. Okay, it went up a bit more because you know everybody buys the dip, right? Fucking stupid people. And basically, but I think this is also possible that it's just from the inflows because the inflows overpower everything. And once you get to the top, as long as you remain there and you keep providing good financials, you stay there, kind of speaking. So yeah, if this was a real .com bubble, this will be like 10 trillion at least, right? So this is not a .com bubble. And also spotting a .com bubble is like very easy. So actually, this further increases the confidence in going 100% TQQQ or 100% UPRO because you can spot it, and I'll show you. Do you have the audio here?
I cannot hear it. No.
Okay. I need to download this real quick. Anyway,
well, you got a minute and 30 seconds, buddy.
Okay, just watch this video, and you'll see why it doesn't. .com won't happen again. Because there are regulation, and also .com was like the most one-time event imaginable. And it's so stupid for people like you to say TQQQ doesn't work long-term because .com, even though the chance of .com happening
again...
I
didn't say because of .com. I didn't say that.
Okay, now we have 1 minute left. I guess, do you want to say something more for 5 minutes and take your conclusion?
No, I think this is a very healthy debate, and you know, I wish you the best in all your future investment endeavors.
Yeah, the thing is, I just I focused too much on explaining. I didn't focus so much on destroying you, which I find unfortunate.
I think I might delete my channel after this.
Bro, you need to sell VT. but the thing is, you're gonna see on the long term. Dude, just like in 5 years, look TQQQ versus VT. You're gonna see you got outperformed again. In 10 years, do the same. In 15 years, do the same. In 20 years, do the same. Dude, it will never fucking stop. It's been going for a while.
I don't want to get rich that quick, okay? I like taking my time.
Okay,
if you get rich too quick, you just, you go crazy. It's not good. It's not healthy.
Okay, brother. Out of my 3 videos, John Cena, Brock Lesnar, and Big Show, could you give me a summary of what they represent?
Your investment genius. They were pretty good videos. I'll give that to you. They were pretty entertaining. They probably demonetized my video, but I'll accept that. Okay.
Do you wanna watch them again just to see the strength of them one more time, just because they were so good?
You get one video, and I'm gonna piss while you do it. Oh God! All right, here you go.